Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl? Superwoman.
I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere.
Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like,
Canada.
is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
it was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life there is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects a migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future, in coastal areas it's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics.
The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So it's Wednesday, but it's actually technically our Thursday because tomorrow's our Friday. Kind of ish.
Yeah, it is a little wild of a week, especially when it comes
to
economic data.
Yes, we will, though, get the jobs report on Friday, even though it's a market holiday. We're going to be talking about jobs because we did actually get some upbeat jobs data today. We've got the market taking off once again, and we're going to talk big time about infrastructure.
Yeah, stocks rallying off that infrastructure news.
Yeah, exactly.
Investors happy about it.
Yeah, especially the tech trade bouncing back. All right, lots to come. Let's get you going, though, on this Wednesday with a check on the trading day. Here is Doug Krisner.
Hey, Carol. So in terms of that infrastructure plan, one of the debates happening in markets today is whether or not it's possible to provide too much in the way of stimulus. And in this case, when that stimulus is being paid for by tax hikes on businesses, the corporate tax income rate as a part of the Biden plan would go to 28%. That's up from the current 21%. Right now, the equity market is trading higher. We've got the S&P advancing for the first time in 3 sessions, and we are technically at a record level here, 39,090 or thereabouts. Information tech out in front of this advance. We'll hear more on that momentarily when we check in with our Dave Wilson. The Dow is only up 0.2%, but that tech strength lifting the NASDAQ composite higher by 1.8%. The Securities and Exchange Commission has opened a preliminary investigation into the meltdown of Bill Hwang's Archegos Capital Management. Now, this fund's liquidation is continuing to play out in trading today. Viacom CBS down 4.5%. Class A shares in Discovery up 3%. And check this out. Class B shares in Discovery up 75%.
I saw
Did you see
this.
that? It's amazing.
Yeah, we're going to pick Dave Wilson's brain about that one because he said that's the voting stock, correct?
Let's A versus B, voting, non-voting. I don't know which one this would be. You caught me. That's good. You caught me.
Can never catch Krisner.
All right. Let me just tell you that the 10-year is yielding 173, and I'll give it to you, Carol.
All right, sounds like a plan. All right, Doug Krisner, thank you so much. You are listening to Bloomberg Business Week, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Let's get to the Market Drivers Report. And let's talk about the market, set the Business Week agenda. Dave Wilson with us, stocks editor at Bloomberg News on the remote access in New Jersey. Michael McKee, international economics and policy correspondent at Bloomberg News, on the phone in our New York City bureau. Mike, I kind of want to start with you because I feel like we want to hear from Fed officials, and you actually caught up with one.
Yes, Dallas Fed President Robert Kaplan just a few minutes ago. By the way, Carol, Friday is Friday. So what time are you coming in?
I didn't want to blow it up for you, Mike, but I did talk to Mike early this morning, and I learned that he's like the only one working on Friday.
It's a gift to you after working many holidays where the markets were closed.
Thank you for doing that, Mike.
Anyway, the infrastructure bill that the White House is putting forward is the big story of the day. And while the Fed's gone out of its way not to talk about what should be in the bill or even how much it should be, and they certainly don't want to talk about the politics of it, you can't ignore the economics when you got $2.25 trillion in spending over the next 8 years if that were to pass. And so when we spoke with President Kaplan a short time ago, I asked him, what are you going to do about that? What does that mean to the economy? Here's what he said.
The important thing I look at on infrastructure, we've had a lot of fiscal spending, which has been necessary to emerge from the pandemic, but a lot of that spending will fund current consumption. And so the impact that has creates a bump in GDP, but over time that bump wears off. The nice thing and the desirable thing for me about infrastructure spending, it's a long-term investment. And what do I mean by that? It's an investment you make today or over the years, and it should help in future create higher potential GDP growth, higher sustainable growth, better productivity.
Which is one of the arguments that the administration is going to make about paying for this, that as long as you can keep growth above the level of interest rates, then you're going to be able to afford to deficit spend.
What did he say about inflation? Because that's what everybody wants to know about.
No real change in his view. He thinks that we are going to see inflation. There's certainly supply shortages as the economy comes back online, and companies do seem to have some pricing power now, but like the rest of the Fed, he feels it's going to be transitory. In 2022, 23, it will moderate. One of the things I asked him is, well, what happens if it does and you don't get inflation above 2%? Do you leave interest rates at zero? And he said they'd have to consider that. Probably zero rates aren't appropriate forever.
Yeah, exactly. Although we had low rates for a long time after the financial crisis. I'm glad you guys talked rates because I want to bring in Dave Wilson, looking at the equity trade. What is it that equity investors are focusing on, Dave? Is it yields? Is it the infrastructure plan? Is it something else? Is it earnings season just around the corner?
Well, I mean, it's all those things to some extent, but I got to tell you, you look at today, I mean, and, you know, it's not really what we've seen this quarter. It's sort of a throwback to what we saw last year and before with big tech leading the way. I mean, you've got, you know, among the 11 main industry groups in the S&P 500, technology stocks are leading the parade. Then comes consumer discretionary, that category that includes Amazon.com and Tesla, and then communication services, where you'll find Google's owner Alphabet, as well as Facebook. So, you know, it's interesting to see the quarter end on a very different note than we saw pretty much throughout the entire 3 months, where really it was, you know, some of the more economically sensitive areas of the market that were leading the way.
Hey, Dave, I want to get your thoughts on Discovery and sort of clear up what Carol and Doug were talking about when it comes to Class A and Class B shares. What's going on with
Class C, just
in
to
Class
complicate things further.
All right, so several different shares of classes. Help us make sense of it.
That's right. Discovery has 3 classes of stock that are publicly traded, and 2 of them are in the S&P 500. That would be the voting shares under the ticker DISCA and the non-voting shares whose ticker is DISCK. And then there is a 3rd class, much smaller, of super voting stock, 10 votes per share. That's how John Malone controls this company. He owns 94% of that stock. That's the ticker DISCB. That's the one where we've seen all this trading today. You go back and look at the past year, average daily volume just 3,100 shares, which makes sense because there's just not that much stock available for trading, something like 320,000 shares. Today, you're over 1 million. So that means every share available for trading has traded more than 3 times today. At least that's, running the math, you can draw that conclusion.
Right. Talk media, talk complicated transactions and structure when it comes to a media company, and you come up with John Malone. Hey, just quickly, Mike, we did get a read on the labor market just ahead of the monthly jobs report on Friday. Just quickly, what do we need to know?
Well, depending on how you look at it, it's either disappointing or encouraging. It was less than expected, but 517,000 jobs created or restored, probably is the way to put it, during the month of March in the ADP report. Now, we're looking for 638,000 in the payrolls report on Friday. Well, wait a minute. In the last few minutes, that just changed to 650. As more people get enthusiastic about the possibility we're going to start to see a real turnaround starting in March, with states opening up.
All right, good stuff. Mike McKee, Dave Wilson, thank you so much. All right, let's get to the Bloomberg Business Week Bite of the Day.
It's one number that tells us a lot, and it's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, this one's troubling. 135 equal gender pay has been set back by the pandemic. At the current pace, it'll take 135 years for men and women to get the same paycheck for similar work. This is according to a report by the World Economic Forum. Lockdowns have hit female-dominated sectors hardest and left women doing more housework, sapping productivity. The WEF says gender parity should be embedded into economic recovery plans. It's something we talked about a lot at the WorkShift live virtual event today.
Yeah, it is. And you know what? The problem is that it's at the current pace. That means that current pace has got to change. Things have got to get better quicker. We need this to happen sooner because 135 years, that is significant.
I'm not going to be around. My daughter's not going to be around. Like, what's up with that?
Yeah.
All right, let's get to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden this afternoon will unveil one of the most ambitious federal spending proposals in American history. It's a more than $2 trillion plan that would reshape the American economy by renovating some of the nation's most iconic landmarks, rebuilding some aging schools, and spending billions of dollars to fight climate change. White House National Economic Council Director Brian Deese tells Bloomberg it is time to do this.
The American Jobs Plan is a historic capital investment in America. And our metric of success will be, can we make a generational investment, improve these things that matter to people's lives, the way they commute, the way they interact with their loved ones, the way they work, and do so in a way that actually creates millions of jobs in the process.
Deese says the plan would increase the corporate tax rate to 28% from 21% and send a 21% minimum set a 21% minimum tax on corporate earnings. The administration says that tax increases would fully pay for the plan over the next 15 years. Pfizer says its COVID-19 vaccine is safe and strongly protective in kids as young as 12. It's a step toward possibly beginning shots in that age group before the next school year. Dr. Richard Chung is a pediatrician in Durham, North Carolina, and says his 12-year-old son participated in the trials.
Really proud of him for stepping up in this way. And we're excited. As a pediatrician also, I think vaccinating kids has always been front of our mind. It is really critical to keep kids safe.
Chung says he's proud of his son. Most COVID-19 vaccines being rolled out worldwide are for adults, but many experts see vaccinating children of all ages a critical step towards stopping the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Got to say, I love when we're going to go do something, and then all of a sudden, all this stuff starts happening that's relevant to what we're going to do. First of all, a headline crossing the Bloomberg: France starting a 4-week nationwide lockdown on Saturday. That coming from Emmanuel Macron. So not surprised. We've been seeing Europe beginning to roll back once again. We too are kind of just carefully walking on eggshells in anticipation of potentially another wave here in the U.S. That comes, though, Tim, as the CDC now reports more than 150 million coronavirus vaccinations in the U.S., 54.6 million are fully vaccinated, 97.5, almost 97.6 million have at least one dose.
Yeah, the U.S. is making incredibly quick progress when it comes to administering vaccinations. Almost every state in the United States has announced when eligibility will open up for the majority of adults who live there. And the big question now is what happens with those people who are not yet eligible to get vaccinated, namely kids and teenagers. And you heard Nancy Lyons talk about this news just now. But Pfizer, we learned earlier today, gives 100% protection to ages 12 to 15 in a study that could pave the way for students in high school and junior high to start getting vaccinated potentially before the new school year starts.
Right, and they studied about 2,260 adolescents. The vaccine produced antibodies against COVID-19 that exceeded the level seen in vaccinated young adults. Pfizer and BioNTech coming out in a statement. Listen, all 18 cases of COVID-19 in the study were in adolescents who were administered a placebo, the company said. Side effects were consistent with those experienced by people ages 16 to 25. But this is, as you said, we're getting to those younger populations. And that's going to be crucial, I think, in terms of schools, too.
It will. And I talked to Dr. Amish Adalja from the Johns Hopkins Center for Health Security on Quick Take earlier today. And we talked about the next stage of this, which includes even younger people and the tests that are going on right now when it comes to clinical trials and vaccines. That data is still out there.
I asked somebody, too, a colleague, and I'm like, you've got a toddler, will you do it? And they're like, I'm probably going to have to because of childcare, ultimately. So you've got to think about all of these things. We're going to talk more about COVID in just a moment, right here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Earlier in the day, there was a little bit of weakness in the French equity market, and a short while ago, we had a word from Emmanuel Macron, the French president, that France will begin a 4-week nationwide lockdown on Saturday. In the U.S. equity market right now, we've got the S&P trading at record levels, 39,087. The gain is something greater than 0.7%. A lot of technology strength, information tech today, lifting the NASDAQ composite higher by about 1.8%. The Dow, for its part, only ahead by 0.1%. Shares in Delta Airlines getting a little bit of traction today. The company will resume selling middle seats. This is another indication of normalization. Delta also offering onboard snacks, cocktails, and other beverages within the month. And United Airlines saying today that domestic leisure travel is nearly entirely recovered. Here in New York, the state is set to become the nation's second largest legal marijuana market. Governor Cuomo signing a bill legalizing recreational marijuana for adults. The Advisor Share Pure U.S. Cannabis ETF, ticker is MSOS, up nearly 7%. 10-year Treasury right now yielding 1.72%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. You're listening to Bloomberg Business Week. Well, during a White House COVID-19 response team briefing earlier today, CDC Director Rochelle Walensky explained why Americans need to remain vigilant in fighting the virus. Check it out.
This is a critical moment in our fight against the pandemic. As we see increases in cases, we can't afford to let our guard down. We are so close, so very close to getting back to the everyday activities we all miss so much.
And that, of course, was CDC Director Rochelle Walensky earlier today. This, as there's many virus and vaccine headlines again, and we just had one just a few minutes ago crossing the Bloomberg. France starting a 4-week nationwide lockdown on Saturday. This coming from their leader, Emmanuel Macron. And, of course, just a reminder that there's parts of the world that are still seeing the numbers really troubling.
Yeah, despite the progress that we've made here in the United States, much of the world remains unvaccinated. Dr. Ian Lustbader is Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us now on the phone from New York City. Dr. Lustbader, it's always great when you join us. Thank you so much for taking the time. Let's get right into it and talk about what's happening in Europe. As we just learned from Carol, France starting a 4-week nationwide lockdown on Saturday. The big question I have is this the direction that we're going in here, considering we're starting to see cases creep up as well?
I don't think so, and happy Wednesday, Tim and Carol. Hope all is well. Definitely there's a number of countries around the world that are seeing a rise. Fortunately, we're not seeing a big rise in the United States, but and we've done fairly well. A lot further to go in terms of vaccinations, but France is in a bit of trouble. Poland, part of the UK, and certainly other countries like Brazil, even Mexico. So we're seeing a number of areas, and I think they all relate to probably one of 3 or 4 different reasons. One is vaccine availability. We've been fairly fortunate here that we've purchased a large number of different vaccines. They're all fairly effective. And I think the availability now is even greater. So I think we've had that. Many countries in Europe have been either hesitant to take vaccines, and some of them relate to, I'll take this vaccine, but not that, another vaccine. They're suspicious about AstraZeneca or GSK or Pfizer has a preference. So part of it is the availability. Part of it is vaccine hesitancy. Part of it is lifestyle. If they're a more social country and they're not really following barriers, 6 feet and so forth, if they're more social. But also some new strains that B117 has a higher transmissibility. So if you're dealing with a population that has not had a lot of vaccine and you've got a variant that is more transmissible, in other words, one person can infect instead of 2 or 3, potentially 4, 5, or 6 people, then you're going to have many more problems.
So, are we likely to have a 4th wave because of people who might not be taking the vaccine or putting it off, and because we're seeing a COVID-19 strain that as it mutates or as we see the variants and they're higher, as you said, a higher transmissibility, are we likely then to have a 4th wave?
Well, I think that's what the authorities are worried about, and I think we could do a better job at addressing people's vaccine hesitancy. There are people who are concerned about taking it. There are a lot of rumors, unfortunately, on social media and on the internet that are really misinforming people. And I don't think it's enough to say we have to keep our guard up and we have to, get everyone vaccinated. I think we need to directly address some of the concerns in terms of safety, and in terms, we just had Pfizer data that showed very high efficacy in kids 12 to 15.
Right.
I think we need to broaden our availability and really kind of address populations that are concerned, why they're concerned, and can we have the experts from the CDC or other infectious disease specialists kind of really spell out what people are worried about and why those concerns really are not so valid.
Dr. Lustbader, are we still seeing people change their thoughts around getting the vaccine in the sense of what we saw early on in December, January, especially with healthcare workers? Maybe they were hesitant, but then people inside their social circles, inside their families, started getting the vaccine, their friends, and then that sort of changed the way that they thought about it. Is that still happening?
Very much so, and I think you've hit on a very important point, which is people need to share with others that they've had the vaccine, that they did well with it. There are always some mild side effects. I think some people are concerned about, potentially longer-term side effects, which we're really not seeing. Or this report about clots and so forth, which really didn't pan out either. And I think the best way to reduce vaccine hesitancy is to have people in a peer group, a socioeconomic group, your friends basically say, hey, I did fine, you should get it as well. And we're not seeing that as much as we should.
All right, for the greater good, I got one vaccine already. I'm doing great, didn't feel bad. Right? I'm just going to put it out there.
And I'm scheduled to get my first shot on Saturday.
And we know...
So I can't chicken out now.
And we know Ian has gotten it. So, all right, we're going to continue more with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, with us on the phone in New York City. But I have to say, I have a lot of conversations with colleagues or just out and about, and there are a lot of individuals, some who have underlying health that are, conditions that are actually worried about the vaccine's impact on that, and not necessarily thinking that the getting COVID would be, a worse situation.
Yeah, and
with that underlying condition.
We learned today, we've been talking about it all day, but the Pfizer data that we got about the vaccine and its efficacy in kids, that's something I really want to hit with Dr. Lustbader, because we have, over the last few weeks, talked a lot about that portion of the population that still doesn't have access to the vaccine, how important it is to get them vaccinated.
Yeah, he mentioned, so we'll dig into that a little bit deeper right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So never shortage of vaccine or COVID headlines, but we want to talk a little bit more with Dr. Les Bader over at NYU Langone about the new findings when it comes to Pfizer and younger individuals.
Yeah, it's a big deal. I mean, it's a big deal for the possibility of kids being able to do sports again, go back to school. We've heard so much. We've talked to Dr. Les Bader a lot about this, the mental toll that it's taken on kids being stuck at home this past year.
So we'll continue with him in just a moment. Right now, though, let's get back to Doug Krisner with a check on the world of business. Hey, Doug.
Hey, Carol, so do I start with bridges or bongs? Let's begin with bridges.
What?
Let me finish. Okay, so President Biden, we know, is set to unveil this $2.25 trillion infrastructure plan today. The market seems to be debating the possible ramifications of too much stimulus, especially when you consider that this plan will be paid for in large part by tax hikes on businesses, a new corporate income tax rate as it's proposed, up from the current 21% all the way to 28%. Then, the bongs. Here in New York, Governor Cuomo signed a bill legalizing recreational marijuana for adults. Now, Bloomberg Intelligence is saying this could provide a boost to legal marijuana sales in the U.S. for those states where it is legal by maybe as much as $1 billion in 2023. BI also saying the move puts the country a step closer to national legalization, and in the view of BI, there's a chance that could occur during the Biden administration. As an example, let's look at ADRs or check that. This is the ETF, Advisor Shares Pure U.S. Cannabis ETF, ticker symbol MSOS, up more than 7%. The Dow is up 0.2%, S&P extending a record by about 0.8%, NASDAQ comp higher by 1.9%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you, Doug Krisner. Let's get back to it with Dr. Ian Les Bader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us on the phone from New York City. We talked about the Pfizer vaccine. It gives 100% protection for kids ages 12 to 15. That was in a study that the company released the data for early this morning, Dr. Les Bader. It doesn't get any better than 100%, right?
Yes, really encouraging data. And in order to really reach herd immunity, which unfortunately is the only reasonable way we're going to end the pandemic. I know many people talk about therapeutics and so forth, but really having to have people get the infection and then treat them is a very cumbersome way. So vaccines really are the key, and having 100% efficacy in this young population that is certainly exposed to in social settings and so forth, and can harbor the virus with a little less symptoms sometimes. This really is key data, and hopefully will reassure people in terms of safety, certainly efficacy. And I think we need to ramp this up and ultimately distribute it. That's really the key thing, is getting the vaccine eligibility for really more people, and ultimately younger people is the way to move forward.
Hey, speaking of key data, research also, I think it was out just this week too, there was a study, it's kind of a growing part of evidence suggesting that the vaccines, these are the vaccines by Moderna and Pfizer, not only reduce the risk of getting seriously ill with COVID-19, but can prevent catching the virus in the first place. In other words, Ian, we can't be hosts even if we're vaccinated. That's also key.
I agree with you completely. You know, many people are concerned, or one of the excuses for vaccine hesitancy is saying, look, even if I get the vaccine, I could still harbor it in my nasopharynx and transmit it. And that never really made much sense to me, because once you have antibodies, it's much less likely. Of course, you've got blood flow and antibodies in your nose and nasopharynx. So, you know, there are probably a few people who may have that, you know, with studies where they swab you after a vaccine. But the evidence to me is building greater and greater that the vaccines will really make a big difference, also in decreasing transmission and acquisition of getting it. But yet, for example, we have about 25 in 100 people in the U.S. that have had the vaccine. You know, about 25, 26% were growing, about 33 out of 100 in the U.K., but only about 8 out of 100, only about 8% in Europe, which I think is why we're seeing this rise in cases.
Well, we're seeing the rising
We have
cases
to-
here.
We have to address that.
Well, I want to talk about that a little bit because in the United Kingdom, where the vaccination campaign is a few weeks or even a month ahead of where we are in the United States, Israel significantly ahead of the United States as well, cases and deaths have really, really dropped. When does that happen here? Like, what do we know about the inflection point that happened in those countries and when that starts to happen in the U.S.?
Well, the numbers in Israel are certainly encouraging. They're closer to like 75 or 80% of the population, or 75 or 80 out of 100. So that's really when you have herd immunity, and the numbers show that. It's hard to know here because part of herd immunity are people who've already had the virus, and we think those antibodies do stay around for a while. So I think our numbers, I think our herd immunity is higher than the 25%. I'm guessing we're probably closer to 50%, and I think that number is close to the 60 or 70% that we really need in order to sort of break viral transmission. So I think we're close, but I think, as the CDC says, we're not there yet. Hopefully in the next few months and well before the summer, hopefully we will reach those numbers where we will not have to have the same restrictions.
But we
I
don't.
think it's possible.
And do we know how long we stay protected by these vaccines? Is it months? Is it a year?
We don't, and I think that's a really good question, and people ask me that question too. They say, well, why should I even take the vaccine? I don't know how long it's protective. We do have studies out, certainly 6 to now going on maybe 12 months, that do suggest there is protection. And people may need a booster. We don't really know. And certainly if there are more variants, it is possible you may need a new strain booster. But I wouldn't really worry about that at this point because it's hard to measure T cells. And we do think that immunity may be longer even than antibodies. But the antibody levels are high, and they do last for many months at least.
Look, I got to say, I'm not so concerned about the idea of getting a booster. It's what I do each year for a flu shot, so why not just throw the flu shot in with a booster for the COVID shot? And look, I know that not everybody gets a flu shot, but perhaps that will change.
Do we get T cells out of these vaccines? Just quickly?
We think we do, yes, absolutely. And that probably provides much longer lasting immunity than the actual titer of the antibodies. But with all the studies, the antibody titers are higher than the natural infection, and last even longer. So I think there's a lot of good data, and we need to address that.
Well, always good.
Next time, let's talk about the lab leaks.
Listen, always good information from you. I was thinking, I can't wait till where we're in a world where we can just go wherever we want with Dr. Lustbader, because we just cover so many different topics.
Maybe do it in the studio, too.
Do it in the studio. All right, Dr. Ian Lustbader, stay safe, be well, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York City.
Carol, I got to tell you, if you have a terminal, just type in CVID Go. It shows you charts of COVID cases around the world. What you see in Israel is just amazing. The drop was so quick.
Smaller population, though, and they had some deals early on.
But, I mean, just look at the chart.
I know. All right, let's get a check on world and national news. Nancy Lyons, what do you got for us?
Well, Carol, President Joe Biden this afternoon is unveiling his $2.25 trillion infrastructure plan. Bloomberg's Ann Cates has a preview.
The White House says the proposal will be the most sweeping since investments in the 1960s space program and the interstate highway system in the 1950s. The president, during his speech this afternoon in Pittsburgh, will outline the 4-part 8-year program, which provides $620 billion for transportation. It also allocates $650 billion for initiatives tied to improving quality of life at home, including clean water and high-speed broadband. $580 billion will go towards strengthening American manufacturing, and $400 billion will be earmarked to address improved care for the elderly and people with disabilities. In Washington, Ann Cates, Bloomberg Radio.
Pfizer says preliminary data shows its COVID-19 vaccine is proven to be strongly protective and safe in kids as young as 12. 12-year-old Caleb Chung of Durham, North Carolina, is among those who volunteered for the trials.
Participating in this trial and potentially helping other kids to feel safe and want to get the vaccine in the future when it becomes publicly available was really some way that I could actually help out.
Chung says he considered it a special opportunity. The CDC says COVID-19 was the third leading cause of death in the U.S. last year, contributing to a nearly 16% increase in the death rate year over year. Only heart disease and cancer were more deadly. American Indians, Hispanics, and blacks had the highest death rates from COVID-19, while the death rate among white Americans less than half that of minorities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks, Nance. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. Senate Majority Leader Chuck Schumer says he wants to ensure a $10,000 cap on state and local tax deductions. We're talking about SALT is lifted as part of President Biden's infrastructure and tax legislation. I know I'm supposed to be objective, but here. I'm up for that.
And look, whenever there's a story about SALT, it is among the top on the Bloomberg terminal. That it disproportionately affects people who live in high-tax states like California, New York, Connecticut, New Jersey.
Right.
And that's why Senator Schumer and many Democrats and even some Republicans are interested in repealing it. It's Republicans from those states.
Right, exactly. I mean, listen, if you live on the coast, $10,000 cap, you're talking about people are paying $20,000, $30,000, $40,000 a year in property taxes. And I know some people are like, well, you choose to be there, but I don't know that it's that easy. And there are different costs associated with major urban areas and major cities, and you see that most notably on the coasts.
At a press conference, Senator Schumer said, quote, "It's something that I think is very important, and I'm going to fight to make sure it gets done." He did say that the odds of lifting the cap are getting better and better, and the cap has been a dagger in the heart of New York.
I do wonder how tax conversations are going to complicate President Biden's $2.25 trillion spending plan. Listen, he needs, and he's talking about corporate tax hikes, another type of tax, in order to pay for some of this, but I do wonder how that will get bogged down in some of the conversations between Republicans and Democrats about this infrastructure plan specifically.
Well, let's talk about the corporate tax rate, because it was at 35%. But President Trump's Tax Cuts and Jobs Act a few years ago dropped that from 35% down to 21%.
Right.
What Biden is proposing is to move that up to 28%, so somewhere in between that 35 and 21%. So sort of back to where it was, but not even quite as high as where it was just a few years ago.
Yeah, the White House saying tax increases will be, quote, fully paying for the investments in this plan over the next 15 years. Listen, corporate taxes, we've talked about this in terms of what companies ultimately really have been paying, even when it was a higher rate. There's a lot of ways to put money in different places or what have you, and so that their real corporate tax rate was a lot lower, and we know that.
The Biden administration looking to close some of those loopholes as well.
All right, you're listening to Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
During the 4 o'clock hour, that is Wall Street time, here on Bloomberg Business Week, we'll be bringing you live coverage of President Biden unveiling that $2.25 trillion infrastructure plan. Ahead of that, we have the equity market moving up, particularly technology shares today, and that is helping to send the NASDAQ composite up by about 1.8%. And the S&P is extending a record here at 39,088 with a gain of about 0.7% on the day. Airlines, kind of a mixed bag here. Delta is going to resume selling middle seats as of May 1st. It's another sign, or it would appear, of normalization. Delta offering onboard snacks, cocktails, and other beverages with that restart next month. And United Airlines saying earlier today, domestic leisure travel has nearly entirely recovered insofar as United can see. And speaking of recovery, Google will allow employees to return to some U.S. offices within the next month. The company is saying employees can choose whether to go in or to work from home until September. In terms of eco data, pending home sales down in the month of February by 10.6%. That may have been the result of rising prices and a shortage of available properties. And then in terms of employment, private employers in the U.S. added the most jobs in March that we have seen in 6 months. 10-year Treasury is yielding 1.73%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you, Doug Krisner. March is Women's History Month, and Bloomberg Radio is looking back at some of the women who played a vital role in American history. Here with today's installment is Bloomberg's Renita Young.
On this day in women's history in 1888, women's rights activists Sojourner Truth and Susan B. Anthony were among key women who established the National Council of Women of the United States. It's the oldest American non-sectarian women's organization. The group was comprised of several women's voluntary organizations with common interests in the educational, political, and social rights of women. The primary purpose of the National Council of Women in the U.S. was to act as a clearinghouse or information bureau for its members so they can broaden awareness of each other's activities and so they could collaborate better, reducing duplication of efforts. That's today in women's history. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. So we are hyper-focused on President Biden's $2.25 trillion U.S. infrastructure plan. He is expected to announce it in about, I think, 90 minutes from now. And reporting for Bloomberg Business Week is national correspondent Josh Green. He wrote and notes that the infrastructure boon risks adding to the president's immigration woes. It's another side of the story that we hadn't thought about.
Yeah, and like everything else, it is much more nuanced than meets the eye. Joel Weber is editor at Bloomberg Business Week, joining us on the remote from Brooklyn. Amanda Colson-Hurley is politics editor for Bloomberg Business Week. Joel, Josh makes a great point in this piece. He makes a lot of great points that the focus really has been on one thing, this idea of a surge at the border, but there's a reason why people are coming across the United States border with Mexico, and at the same time, it's not necessarily as many children as people think.
Yeah, and I thought what Josh did that was really interesting in this was just like take it to sort of 2 steps further than at least my brain was already going, which was, this infrastructure bill that we expect Biden to announce. Big money. It will mean that there will be a big boost to the economy. It also means that the humanitarian crisis, the immigration struggles that we've seen on the border could only get amplified because of that. So Amanda, let's bring you in. How is Josh able to connect those dots?
Yeah, I mean, the way that Josh connects them is really looking at the economic prospects in both the U.S. and in Mexico. One of the things that's kind of been missed or overlooked in some of the coverage of what's going on at the border is that although there's been this quite pronounced increase in families seeking asylum, there's also been a steady increase since last year in the number of just kind of sole adults not traveling with families, not seeking asylum, just crossing the border for economic opportunity, and a lot of those adults traveling alone are also Mexican. And so what Josh says is that a lot of these migrants are drawn to, opportunities in the U.S. as the U.S. recovers from the pandemic. With vaccination going pretty well here, with jobs coming back, it's an attractive prospect. And Mexico, on the other hand, has been hit very hard by COVID, as has the U.S., but, vaccination is not nearly so far along. And also, the Mexican government has not provided, a generous relief at all. It's taken more of a kind of austerity approach. So those kind of factors, I think, for some prospective migrants would tip the balance to, maybe trying to go to the U.S.
This is one of those stories, as you said at the top, Tim, it's like just the facts. And that this whole idea of this data, 82% of those apprehended recently are single adults crossing the border from Mexico into the U.S., 60% are Mexicans. The thing that's interesting about this, Amanda, too, first of all, is getting those statistics and kind of understanding exactly what's going on, but also understanding that adults who are looking for jobs, they don't require maybe, as much handling as obviously kids would who are crossing the border from Mexico into the United States.
Oh, that's right. And, one of the things that Josh Green notes in this story is that obviously, higher numbers of people making that crossing would be a logistical and potentially political, headache for the Biden administration, but not the same way as, unaccompanied minors or families in terms of these are not people fleeing persecution, back home. If they end up being deported, it's not a humanitarian crisis of sending them back into danger. So some of those logistical and complications and political risks are do not rise to the level that they would with the family asylum seekers.
So given that we expect the economy to start to do and continue to do pretty well here in the United States, unclear how the economy in Mexico will do, but as Josh points out, they are significantly behind the United States when it comes to inoculating the population. Well, at the same time, I'm wondering about potential tools that the White House actually has for fixing this crisis. What are those, Amanda?
Yeah, I mean, if there are certain policies, that it could try to pursue, the Trump administration had suspended temporary work visas. It could bring those back, and kind of generally open up some of those legal paths to immigration that have been blocked for a while. And part of what we're seeing with the increase in unauthorized immigration is kind of overflow from what otherwise might have happened in legal channels. The Biden administration could even kind of offer assistance to Mexico with vaccination. It could, when we have a surplus of vaccine, or I guess we already do, divert some of that to Mexico, and that would help revive the Mexican economy in turn. So then people would have more opportunities at home.
Right. It's something we talked to Nobel laureate Joseph Stiglitz about recently, about how the developed world has to help out the developing nations on a couple different levels, but, first and foremost, helping them get COVID under control and sharing those vaccines. Folks, thank you so much. Bloomberg Businessweek editor Joel Weber with us, along with Bloomberg Businessweek politics editor Amanda Coulson-Hurley. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Businessweek with Tim and myself, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. And coming up next, infrastructure. We're going to talk a little bit about that, too. I caught up with the CEO and president of Siemens U.S., and got her thoughts on that.
Yeah, we're also talking a little Deliveroo later in the show as well.
Not delivering.
Not a good. That was good, Carol. I like that.
Been saving it up all day. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Three p.m. on Wall Street, the equity market with just 1 hour left in today's session of trading. From Bloomberg World Headquarters in New York, I'm Doug Krisner. And a little more than an hour from now, President Biden will unveil a $2.25 trillion infrastructure plan. Now, one of the debates in markets today is whether it's possible to provide too much stimulus. And in this case, when that plan is being paid for by tax hikes on businesses, the corporate tax rate under the Biden plan would go from 21%, which is where it is currently, all the way up to 28%. Then you look at another aspect of this large slice of this plan that will be devoted to green energy, and some of the newest members in the S&P 500, names like Enphase Energy today and the lighting supplier Monolithic Power Systems, they are trading higher but well off their January peaks. Generally speaking, we're seeing a lot of strength in information technology, and that is helping to lead the broader market to a record level. The S&P 500 up about 0.8% right now, 3988. Look at the NASDAQ Composite, up more than 1.9%. And in the small cap arena, the Russell 2000 ahead by more than 1.6%. Where the Dow is concerned, a gain of merely 0.1%. New York Governor Cuomo signing a bill to legalize recreational marijuana for adults. We have the Advisors Share Pure U.S. Cannabis ETF trading up by more than 7% right now. And the SEC has opened a preliminary investigation into the meltdown of Bill Hwang's Archegos Capital Management. If you look at some of the media companies being knocked around by this unwind, Viacom CBS shares most heavily traded down 3.5%. In the bond market right now, we've got a 10-year Treasury yielding 1.73%. A weaker dollar, though, with the Bloomberg Dollar Spot Index falling by 0.2%. We'll have more in 15 minutes. I'm Doug Krisner. That's your Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so by now you know, top story this hour. We just talked about it a little bit with Joel Weber and our politics editor at Business Week, and this is among our most read. It's about President Biden's next stimulus plan, $2.25 trillion on infrastructure. Tim, it is everything.
It is everything, and look, investors are happy about it. They're sending shares of U.S. companies higher today, optimistic about it. We are going to bring you the president's address live when he starts speaking, expected to be at 4:20 from Pittsburgh, Pennsylvania.
And listen, it's infrastructure, it's transportation, it's manufacturing, it's improving the quality of life at home. We're talking about clean water, high-speed broadband. I got to tell you, there's a company that's out there, many that know about infrastructure, but one in particular, we're talking about the multinational conglomerate Siemens. And I caught up with the president and CEO of Siemens US, Barbara Humpton. This was at the Bloomberg Live Work Shifting Summit. And we had a broad conversation, but in this excerpt, she shares her thoughts on President Biden's infrastructure plan. Listen up.
Yeah, this is actually a really exciting day, isn't it, to see the administration proposing such bold moves in things that really matter. You know, here we are thinking that we're at the end, or should I say the beginning of the end of a pandemic, and yet we're also at the beginning of something brand new. When we think about the power of infrastructure, and particularly the power of infrastructure using today's connected technologies, we have the chance to drive a step change that's going to basically create the foundation for a strong economy for decades to come. So we at Siemens are bullish on the next steps in America's infrastructure.
Is it safe to say that companies have already been calling you in anticipation of this spending or focus on infrastructure?
Siemens has been focused on infrastructure for a long time, and I often get asked, you know, does a change of administration make a big difference? And this is truly a bipartisan topic. So I'm proud to say that Siemens, for over 160 years, has been building America's infrastructure here in the U.S., right? Everything from originally getting involved in power, in healthcare, in transportation, now the future of buildings, the future of manufacturing. These are things where we've got broad ecosystems, partners all across the country ready to perform, and I think this is a chance to up our game.
You talk about the future, Barbara. So talk to us about visibility that you feel like you have, generally speaking. We're going to drill down into schools in particular. But when you look at the economy from your vantage point, you work with so many different industries, so many different companies, so many different suppliers. What's the economic and business environment? What does it look like? What visibility do you have right now?
Yeah, we recognize that there's been such tremendous impact on the economy throughout the pandemic. This has been a really tough year. And yet, if you look across verticals within this market, you see some exciting signals. As I say, there are segments of the market that have been stepping up, responding to the call, actually transforming themselves. We knew before coronavirus hit that we were at the brink of a digital transformation. This Internet of Things that is going to be so much bigger than the last decade of the Internet of People. So we recognize the opportunity ahead. There are strong verticals beginning to make a move. And where we focused most deeply during the days of the pandemic was first hospitals, making sure healthcare had access to the technologies they needed. Then schools, obviously working with our partners to make sure we were supporting the education of our children, but also in industry, stepping up, helping pharmaceuticals, medical devices, helping those who are producing PPE, the items we need every day that are going to be vital to us. All of these, we've been able to ramp up production, help people with the tools we can bring to the table. But far more important than the technology and the tools has been the people. It's been phenomenal to see relationships come to fruition and get creative.
So in terms of the economic outlook, do you feel like you have a lot of visibility about the next 6 months or so? Like, does the economy feel a lot better?
Yeah, I'm bullish. We are all bullish on this. We know that there's pent-up demand. We know that as things come back online, there's going to be a surge to respond to immediate needs, and we see the power of the transformation ahead.
All right, that was Barbara Humpton, President and Chief Executive Officer at Siemens USA, catching up earlier with me at the Bloomberg Live Work Shifting Summit. For those of you watching on YouTube, I know I made a face, but that's because I stumbled getting into the introduction. So I'm just covering myself because Barbara was amazing. Listen, you can hear more of that interview. You can catch it on our Bloomberg Business Week weekend show, also on our podcast feed at Bloomberg.com. Infrastructure, this is a massive plan. This is a company who understands it, knows what's going on with companies, what they want to do when it comes to infrastructure.
Well, let's break down some of the details in this infrastructure bill. You talked about some of these numbers earlier, Carol. This is a 4-part, 8-year plan, and $620 billion would go to transportation. So that would include a doubling in federal funding for public transit. It would then provide another $650 billion for initiatives. These are the ones tied to improving the quality of life at home, like clean water, high-speed broadband. We've learned so much about the digital divide in this country over the last year specifically, with people who cannot afford to have high-speed internet at home or don't even have access to high-speed internet at home because they live in places where that high-speed internet access is not available. This would potentially help them significantly. Then $580 billion for strengthening American manufacturing, some of $180 billion of which would go to the biggest non-defense research and development program on record.
Listen, what I'm going to say is, and I highly recommend that everybody go to Bloomberg.com, there's a really thoughtful story that basically compares the U.S. To China, and specifically China's GDP and how it's catching up to become the world's largest, and it's moved very quickly. And some of it has to do, a large part of it has to do with the amount of money that the government has spent. I realize not apples to apples, China and the United States, but Xi's government, President Xi's government, they've set out a 15-year plan for the country's transportation network. I mean, they have been plowing money into that country for years, and they are way ahead of the United States. And listen, this plays into global economic growth, country economic growth, and it's just something to think about as we move forward.
This is going to get ugly politically, with Democrats and Republicans disagreeing already about this plan. One way potentially that perhaps they could meet is through the common foe of China. And if Democrats potentially pitch this or parts of this plan as a way to catch up with China, given how quickly China is catching up with the United States.
And this will ultimately, you spend on infrastructure, you do see it play out in economic growth. Just check out some of the research. All right, you're listening to Bloomberg Radio.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, you've been talking about it. President Biden will be unveiling a $2.25 trillion U.S. infrastructure plan this afternoon, which is the largest investment since the space program in the 1960s. It'll be paid for by raising taxes on businesses and the wealthiest Americans. Director of the National Economic Council, Brian Deese, tells Bloomberg it's time to put public dollars into our crumbling roads, bridges, and schools.
This is about public sector investments that we know will actually generate job growth. We know will help spur innovation across the economy, and we have done before as a country. This is not new. It's just that we haven't done it in quite some time, and we need to do it at historic scale.
Deese says the U.S. cannot risk falling behind. The proposal faces, though, a rough road in Congress, with Republicans likely to push back against the cost. New York City police say they've arrested a convicted murderer and charged him with a hate crime following that attack on a 65-year-old Asian American woman on a New York City street. The authorities say Brandon Elliott was identified as the man seen in the viral video, kicking the woman to the ground and then kicking her several more times. Elliott was on lifetime parole after serving a prison term for murdering his mother. Some good news for those who love a glass of wine. A new British study found people who consume alcohol moderately appear less likely to develop cataracts. And in the report published today in the Journal of the American Academy of Ophthalmology, researchers indicated red wine lowered the risk 14%, white wine lowered it by 10%. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much, Nancy. It's why we are doing a wine guest.
Yeah, it's for our health.
It's for our health. That's what it's for. The common good, our good. Yeah, exactly. Listen, one of the big stories this week, we're going to talk about it in our weekend show on Bloomberg Radio and in our podcast, but has to do with Archegos, right? Is that how we're saying it now?
Yeah.
Archegos. The fund, of course, that blew up, the block trades that blew up at that family office. There's a couple of stories that we want to point out. One is the SEC.
Yeah, the SEC has opened a probe into Archegos trades that triggered the sell-off. The U.S. Securities and Exchange Commission has opened a preliminary investigation. The SEC started the civil probe in recent days after the Archegos Capital Management made a series of wrong-way wagers that prompted brokers to liquidate those positions. This, according to a person familiar with the matter who asked not to be named.
It's like,
it's
pretty routine after a major market blow-up. Like we all expected, the SEC to do this. Keep in mind, this inquiry may not lead to any allegations of wrongdoing, so that's to keep in mind. At the same time, there's a couple of stories on the Bloomberg. One is, I love this story about what happened with Archegos is kind of a reminder that when it comes to the really wealthy and sophisticated investors, you often see a lot of leverage. And the super rich, this story by our own Venus Fang, says that the super rich, it's just a reminder that they love leverage.
Yeah, Bill Wang used leverage from across global banks to build his family office into a whale with positions that may have topped $50 billion, but it can all come crashing down quickly with leverage.
Right, and says this story, more than 10% of the world's 500 richest people have committed stock for a combined $160 billion, according to some of our analysis. That represents almost a fifth of their public holdings, up from $38 billion 4 years ago, and doubles some of the pledges, I guess, that they made previously. So I guess what we're seeing, is that right? Yeah, I guess that's right. We're just seeing more leverage.
Yeah, we are, and it's a good reminder. And there's finally one more story about Deutsche Bank dodging $4 billion of the Archegos bullet with a quick sale. Check it out on the Bloomberg.
Yeah, there's tons and tons of stories. This story just continues. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We are about an hour away from President Biden's presentation on this $2.25 trillion infrastructure plan. Live coverage ahead here on Bloomberg Business Week. Right now, though, we cross to the Bloomberg Macro Squawk Desk to get an update on today's trading. We've got Bailey Lipschultz with us. Hey, Bailey.
Hey, good afternoon, Doug. Stocks are trading at a record with stocks are trading higher, with the S&P at a record. The Dow is up 35 points. S&P higher by 30 with the NASDAQ up 275 points. U.S. 10-year yield is at 1.73% and small caps are higher by 1%. 6 of the 11 main S&P sectors are trading higher, led by gains in tech and consumer discretionary, while energy and financials are the worst performers. NASDAQ biotechs climbed 130 points, transports dropped 30, semis are up 100, while the VIX is lower by 2.9%. Leaders in the Dow, Walgreens, Apple, and Boeing, while travelers, JP Morgan, and Goldman Sachs are the worst performers. Regarding deals, Microsoft rose after winning an Army contract worth as much as $22 billion, and Fortnite maker Epic Games is in talks to raise as much as $1.7 billion. In other news, Tesla-led EV makers higher after new proposals from President Biden, and Pfizer rose after its COVID vaccine gave 100% protection in a study of teenagers. Wrapping things up, pot stocks gained after New York Governor Cuomo signed a legalization bill. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Doug?
All right, Bailey, thank you. Right now in the bond market, 10-year Treasury with a yield of 1.73%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So among our most read stories on the Bloomberg includes this next one. Not delivering in its first day of trading as a public company. We're talking about Deliveroo Holdings collapsing, Tim, in its London public debut. Investors abandoning the food delivery startup. And that's because of its labor practices, among other things.
Yeah, really interesting story happening, and it's not one that's necessarily playing out in the United States. And that's what's so interesting to me about this, because investors here don't really seem to care about those things.
But it's trending high on
the
Bloomberg.
It is. Oh, it is. What I mean, though, is investors don't care about it with American companies.
Yeah, exactly.
That's what I mean.
Oh, that it doesn't transfer.
Yeah, it doesn't transfer. Diana Gomes is consumer staples analyst at Bloomberg Intelligence, joining us on the phone from London. Diana, help us make sense of this, because what I'm getting at here is that ESG is something that investors talk a lot about here. It's something that bankers talk a lot about. But at the end of the day, it's not part of earnings. And investors look at earnings. That's what moves a company's stock. And it seems like, from what I've read and from what I understand about the Deliveroo story, there are some big investors that are unwilling to actually buy the company's stock because of the company's labor practices.
Yes, hi. Thank you for having me.
Yeah.
And that's partially true that ESG doesn't quite transfer to earnings. So it's some of the biggest UK asset managers came out over the last week saying this is not aligned with our investment practice. And yes, part of it has to do with the status of the riders. So Deliveroo is a logistics-focused, trying to serve on-demand food delivery from restaurants and also grocery stores. So it needs this big fleet of riders that can really serve the demand for these goods, especially at the time where we are spending so much time at home with lockdowns and restrictions. So there is some concern, and some of the riders may be earning much less than the minimum wage, and that really depends how we count the hours. But the other point is this is a profit-lossing company, so it has been burning cash. And the possible regulation changes, especially in many of the European markets where Deliveroo competes with other very aggressive competitors, the regulation is changing, and that will mean higher costs, because it could mean a minimum wage, it can mean insurance, paid holidays, leave, and all that will then transfer into the earnings. So it is a big risk, and it's a risk that Deliveroo reflected in their prospectus as well.
Diana, I got a couple questions, but how likely is this too that just these types of companies, which have been pandemic plays in the past year, are just kind of falling out of favor with investors? We see that, and you point this out in your story. I mean, DoorDash is down 23% this month. You see others like that. Also, Just Eat Takeaway, a European rival, Delivery Hero, they have fallen this year. Is it just a case of like, not so interested in these kinds of companies right now?
Yeah, so the story is really turning as we see the vaccinations rolling out, even if quite slowly in some countries. But the story is turning into, yes, the consumer will want to do things outside the house and will want to go dine at their favorite restaurants and meet friends and all that. So these companies rely on delivering meals from restaurants at home, and that's not. The demand will not be at the same level as it was in 2020.
I have to say, Tim and I had a conversation off air, and we're just like so tired of takeout. Like, just like we're talking about cooking. It's hard when you're working and all that stuff, right, Tim? But we were just saying, I'm done kind of with takeout.
Yeah, but the hard. I mean, look, it's a tough thing to be thinking about because in one sense, it has absolutely saved people during the pandemic when it was like difficult to get other types of food. People who were really concerned about going outside and just thinking about the people who were the essential workers who were delivering this food, right? And that's a big part of the conversation here in the United States. But I go back to
some companies, restaurants. Yep.
Exactly, yeah, and helping out restaurants. But a big part of the conversation is it's just not necessarily on the radar of investors the same way that it's on the radar of investors in the UK when they're thinking about the regulatory risks, I think. And perhaps this is some sort of harbinger of things to come in the United States. What do you think, Diana? I mean, do you think there's a chance that some of the regulatory risk could come to US companies?
Yes, I think the regulatory risk is smaller in the U.S., especially with the California Act that was agreed on quite recently. So that's required some minimum benefits to be paid, but it was quite limited. So and it was limited to California as well. So I think the sentiment and the perspectives are different, and that probably hurts Deliveroo as well because they had the choice of listing in London instead of New York, and
Well, that's what I wonder too about what it ultimately does for the London IPO market. Diana, thank you so much for breaking it down. Diana Gomes, consumer staples analyst at Bloomberg Intelligence, with us on the phone in London. You're listening to Bloomberg Business Week, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It certainly is. Guess what we got coming up?
Chart of the day.
And the song of the day.
And
I don't know.
Dave Wilson.
Oh, yeah. I mean, that goes without saying, Carol. There is no chart of the day or stock of the day
That is
or
so true.
song of the day without Dave
so
Wilson.
true. I'm looking forward to guessing. All right, we'll get to that in just a moment. Let's get back to Doug Prisner. Hey, Doug.
Hey, so about 28 minutes now until the closing bell. Looks like the S&P is, well, we are on track for a record high. Let me put it that way, 39,089. We are up in the broader market for the first time in 3 trading sessions. And we've got a lot of strength today in information technology. Apple, as an example, up nearly 2.4%. Shares in Tesla better by nearly 5.5%. I guess if you were to call it a theme, it's the growth story over value, right? S&P 500 with a gain of 0.8%, and the NASDAQ composite higher by more than 2% right now. But the Dow is only up 0.1%. We've got a lot of the pot stocks advancing. And as an example, the Advisor Shares Pure U.S. Cannabis ETF is up more than 7%. This is after New York Governor Cuomo signed a bill legalizing recreational marijuana for adults. Now, in the next hour here on Bloomberg Business Week, we'll be hearing from President Biden. He'll unveil this $2.25 trillion infrastructure plan. A large slice of this is going to focus on green energy. Now, some of the newest members of the S&P, names like the solar power company Enphase Energy and lighting supplier Monolithic Power Systems, they are higher today, but well below their January peaks. 10-year Treasury yielding 1.73%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you, Doug Krisner. This is Bloomberg.
Dead or alive.
This is Jersey. Little New Jersey love?
Totally. That's why the Jersey girl can sing it.
All right, I'll just say it.
Someone who's got great hair, too.
Bon Jovi.
Not me. Bon Jovi.
So I'm 1 for 3 this week.
Nice job.
I mean, I'm going to say that I got the Bruce in my head, but on Monday.
Any cheating?
Never. Sometimes.
All right, Dave Wilson.
Sometimes
it's good when we get a little Bon
Googling.
Jovi, a little New Jersey guy.
You have to thank our producer, Paul Brennan, for
Ah,
making that choice.
thank you, Paul.
No,
Good one, Paul.
But it fits. I mean, because when you see a headline on a chart that says dead weight, well, that's half the story right there. And what it refers to is technology stocks. Now, things have changed as the first quarter has come to an end. I mean, so tech stocks are now off the bottom among the 11 main industry groups in the S&P 500, which is actually where they were yesterday. And that would have been something because, it's only happened once since 2008 that information technology has been the worst performer among the S&P 500's 11 main industry groups. And, you look back a little further than that, you have to find a time when the S&P 500 rose and tech was the biggest laggard. I mean, you had to go all the way back to 2004, according to data on our terminal anyway. So, clearly this is a very different quarter with technology having lagged the way it has, even if indeed it's not number 11 out of the 11 main industry groups at the moment, thanks to today's rally in the big tech stocks that we were talking about just a little bit earlier on the program. Checking at the moment where we stand. Okay, the S&P 500 Information Technology Index up 2.2%. It ranks 9th out of the 11. Utilities and consumer staples bringing up the rear. Nonetheless, the point is still there. This is a very different kind of quarter with the weakness that we've seen in tech stocks and the S&P 500's ability to move higher. You look at those periods in the past when tech ranked last, typically the S&P 500 fell, and in essence, the stocks were dragging down the broader market. So, what we're seeing in this case is sort of the exact opposite of that, with the S&P 500 going up in the face of weakness among its biggest companies, in essence. And the biggest industry group, when you look at it that way, carries more weight than any other, about 26% of the index's value. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So I kind of feel like, Dave, the question at this point is, does tech play catch up with the broader market, or does tech ultimately drag down the broader market? I don't know if history tells us anything on that.
Yeah, I mean, you can think back historically. There used to be a time when people would say the S&P 500 can't possibly move up without financial stocks. And then we saw the financial crisis in 2008 and the recovery out of that. And we saw that, well, that wasn't exactly true. You can go back even further, looking at energy stocks when they were, relatively dominant in the market. It was a similar story. So, that's the real question here. Is there enough leadership outside of technology now to suggest that, yes, the stocks can move up without that dominant group kind of leading the way, or is it, going to be a different story in the end?
So what does this mean when it comes to the growth versus a value conversation? How does this add to it?
Well, let's face it. I mean, for the most part, technology stocks are growth stocks as well. So, to the extent that there is more interest in the shares that are relatively cheap by comparison with earnings or sales or asset values or whatever your yardstick is, that works against technology, because you think about where the growth is. It's certainly in the likes of Apple and Microsoft and all the other companies we talk about day in and day out.
Hey, did you know, I'm looking at Wikipedia, that John Bon Jovi, I think, has said that he is a blood relative of singer Frank Sinatra. Did you know that?
I did not know that.
Didn't know that, but he is a good Italian boy. His given name is Bon Jovi.
Yeah, I was just looking at
Italian
that.
to me.
Yeah, exactly. Then Southern Jersey was down the shore.
Well, I don't know. Southern,
Yeah, I
I'm
know.
from Central Jersey, and so is Bon Jovi. He grew up actually just a few miles south of where I live now.
Metuchen?
Yeah.
Yeah. So you're right. I don't know that that's down the shore, but you know he was going down the shore.
Well, he was certainly playing there. That's where he made his name, with bands like Atlantic City Expressway.
I'm just a California boy. I got nothing.
He's got nothing,
Jersey.
Dave. He's got nothing. We'll have to just continue.
You're gonna have to get him up to speed.
Yeah, well, no, we're gonna get to this. We're gonna go to the Stone Pony.
You and I will continue the education of Tim Stenevec when it comes to music. Good song, though. Love getting some Bon Jovi on this Wednesday. Dave Wilson, he's going to be back a little bit later on with his stock of the day. In the meantime, quick check on the trading day. We've got the Dow just down about 8 points. S&P a gain of 26. NASDAQ definitely charging ahead. The outperformer on a percentage basis up almost 2% for a gain of 253 points.
On the last day of the quarter.
Done.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Former Treasury Secretary Larry Summers may not have been keen on President Biden's stimulus package, but he is sold on the infrastructure plan the president will outline in a speech this afternoon.
It's what the country needs. This is all very much on the right track.
You can hear Summers' full interview on Wall Street Week, which will air on Bloomberg Radio this Friday at 6 p.m. Wall Street time. Biden's American Jobs Plan calls for a $2.25 trillion investment in infrastructure. The NCAA is asking the U.S. Supreme Court to overturn a lower court decision giving college athletes the right to receive additional money to pay for education-related bills. Bloomberg's Irv Chapman has more on today's arguments before the High Court.
Lawyer Seth Waxman argued for the NCAA.
For more than 100 years, the distinct character of college sports has been that it's played by students who are amateurs, which is to say that they are not paid for their play.
Several justices were skeptical, including Brett Kavanaugh.
It does seem the schools are agreeing with competitors to pay no salaries to the workers who are making the schools billions of dollars.
The athletes asked for unlimited salaries. The lower court said the payments, while not limited, had to be somehow related to education. In Washington, Irv Chapman, Bloomberg Radio.
Well, the brackets are dwindling in the men's basketball tournament. The final 4 spots have been claimed. Undefeated Gonzaga will take on UCLA, while Baylor will play against Houston. Both those games are on Saturday. The title game will be played Monday night. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you, Nancy. Carol, I'm really excited to talk about this one because there are some things that I don't really like as a journalist.
What?
One of them is April 1st. April Fool's Day.
Oh, because you might be like snookered?
Well, it's turned into this thing over the past few years, and I think it really started about a decade ago with tech companies, and Google was really guilty of it, where they would do these kind of like little pranks for April Fool's Day, and they were kind of cute at the beginning, and then it got to the point where they've gotten completely out of control, and in my opinion, that's what happened this week with Volkswagen.
Well, listen, they came out and...
but maybe I'm just a curmudgeon. Who knows?
Yeah,
I'm a curmudgeon.
I can't believe you are kind of a curmudgeon. I've got to say that I love this story when I was reading in this morning. So Volkswagen of America apparently had kind of made a name change, or so we thought, to Volkswagen. And it turns out, folks... No, they really didn't. It was just an April Fool's joke.
They didn't do that, but the problem was the execution. And the problem is that they
posted this.
They posted it and they took it away.
Right.
And then when different media organizations called up the company to ask the company to confirm it, according to some publications, they did actually confirm that they had changed the name. So then news organizations like the Associated Press, like CNBC, they had those stories that said that Volkswagen had changed the name. And then it turned out it wasn't actually true, and it was part of an April Fool's joke. And it creates a big issue because it's about, we have a problem with trust in this country when it comes to media and when it comes to companies as well. And I think it also is an issue for a company like Volkswagen that's still not not past the Dieselgate incident years ago when they lied about diesel emissions.
Well, and the thing is, listen, this comes on the heels of all of a sudden VW has ramped up its efforts when it comes to electrification of vehicles, right? And so a lot of this is going, their electric ID4 crossover, it's just arriving in U.S. showrooms. The CEO of the company has taken a more active role in getting the message out. And so to see this, they're like, well, maybe this is happening. The company's making a big change. And then it turns out not so much. So not a great joke.
Not a great joke.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So about, just under 13 minutes until the closing bell. The equity market is trading mixed right now. The Dow is down about 0.1%, but we have the S&P 500 extending a record. The first time that we are up in the broader market in 3 sessions, and the S&P being led to the upside by a lot of strength in information tech stocks today. We've got Apple shares up by more than 2%. Tesla is ahead by more than 5%. And I'm looking at shares in Microsoft, better by more than 2% right now. The company's deal to build customized versions of its HoloLens goggles for the U.S. Army is moving forward. This is an augmented reality device. It was initially unveiled 3 years ago, and today Microsoft is saying it's now worth as much as $21.9 billion over 10 years. NASDAQ composite on that tech strength is up by a little more than 1.8%. We've got a weaker dollar and weakness in the price of crude oil as well, with WTI right now in the extended electronic session down more than 2%, 59.25, and a 10-year Treasury yielding 1.72%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you, Doug Krisner. It's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we're taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's John Tucker.
Minority-owned businesses were among the hardest hit at the start of the pandemic. But when protests for racial justice took hold over the summer, shops like Black Pearl Books in Austin, Texas, experienced a customer surge. Katrina Brooks runs this Black-owned bookseller. At the start of the pandemic, pop-up events that drove online sales were canceled, and then came the killing of George Floyd. That led to what Katrina describes as a great awakening.
Our online traffic increased by like 200%, honestly. It was, this overnight thing where all of a sudden we started getting order after order after order.
People turned to books for answers.
Seeking knowledge about, racism, anti-racism, social injustice.
While parts of the country erupted in violence, Katrina says she saw the good side of people seeking out ways to understand. While events transformed her business, she got in front of those events and succeeded in a year like no other. I'm John Tucker, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left in today's trading session. Let's get to it with Walter Todd, Chief Investment Officer at Greenwood Capital Associates, back with us and on the phone from Greenwood, South Carolina. Walter, how are you?
Doing good, Carol. Thanks for having me on today.
Thank you. Well, it's good to have you back with us. How do you feel like where we are in terms of out of COVID, into a recovery, into blank for the markets?
Yeah, it's really amazing to reflect back on 12 months ago. I was just looking at S&P closed at 2584 that day, and we're pushing 4,000 here this afternoon. So one of the biggest questions I get from people is, how do you explain this?
Okay, ladies and gentlemen, it's time to play stop on profit for euro. So if you play straight, if you already hold euro, we need to play stop on profit at 117.23.5. Okay? So stop on profit play, so you need to do the same.
Worst. So you kind of get that the market looking ahead, anticipating the reopening, and then the challenge as you actually get very good economic numbers for the rest of this year.
So a lot of optimism already priced into markets is what you're saying, right?
Yeah, I think I think there is as the saying goes, the easy money's been made, and I think the money moving forward, or the gains moving forward, are going to be more challenging, going to be more nuanced. There's going to be a lot of chop, which we've seen over the past month or so in terms of the rotation in the market. And then we've got the risks out there, from Europe. I mean, France just announced today they're going back into lockdown for 4 weeks. So we've got other parts of the globe that are not in nearly as good shape as the U.S. is.
Does that make you a little...
Okay, guys, we closed position. It took us, well, half a day to reach the necessary level to close in profit from half a day. Yes, from 2 o'clock until just right now. And you already know how much profit you got because broker sent you already confirmation. In our case, we got £200 in profit. Okay, well done, guys. This is what it's all about, to day trade based on a relatively small amount of profit. And if you trade several pairs, if you know how to hedge, if you buy and sell, you can get decent profit per day. Just on one screen, we made £200 in profit. We have several screens and we trade most of the major pairs on Forex. So just imagine how much profit you can make per day. If you want to get a strategy, you can get it from our side, or you can get from, as you can see, red line, and it's on company.co.uk/daytrading-strategy.html. Nice one. Stay safe.
And clearly, the moves that the central bank made and that the government made in terms of the stimulus and the support that they provided that downside support for the market. But we still have all these issues. We have 10 million fewer jobs than we did a year ago. We still got close to 19 million people collecting some form of unemployment insurance. So there's still a lot of work to be done. But clearly, the support that the central bank and the government put out there was a big tailwind for financial markets.
I'm wondering what happens when it comes to taxes, because part of the infrastructure plan, and we're going to hear from the president in a little over a half hour. That's when around a half hour. It's when he's scheduled to talk at 4:20 Eastern time today, and unveil more details about his infrastructure plan. Some of those details include a hike on corporate taxes to 28% from 21%. Market's not moving negatively on that news. It doesn't seem like investors are concerned about a corporate tax hike. Why do you think that is?
Yeah, it's a great point, Tim. I mean, I think the corporate tax hike was broadly anticipated, the rate to 28% that's being proposed. I think the expectation that's going to be walked back down to 25, so go from 21 to 25. It's not insignificant, but it's not a huge move. I think investors may be missing the fact that this is just part one of this plan in terms of the spending and the taxes. So there's going to be a second part of this plan that's going to include additional taxes that may bite a little bit more. They may include capital gains taxes. They may include higher individual taxes as well. So I think the total tax bill that's going to be proposed is probably going to be push $3 trillion. And when it fully comes out, that may be a bit of a shock to investors, even though we do have spending on the other side of it. But remember, taxes hit immediately.
Right.
The spending is going out over 8 to 10 years. So there's going to be a drag when we head into 2022 because of that.
Hey, Walter Todd, as an equity investor or someone who is investing in the equity market, just got about 30 seconds here. What's more problematic, capital gains taxes or a corporate tax hike for publicly held companies in particular? Just quickly.
Yeah, I think from an investor perspective, the capital gains hike would be more significant, and one of the main reasons for that is there's the prospect that it may become effective upon enactment. In other words, if it happens and they pass it in September, it could become effective this year, and that would be problematic for investors, I think.
All right, always good to check in with you. Walter Todd, President and Chief Investment Officer over at Greenwood Capital Associates, on the phone from Greenwood, South Carolina. Stick around, we've got the closing bell coming your way in just about 3 minutes.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
4 p.m. on Wall Street, that's the sound of the closing bell, and it looks like it's going to be a mixed day for the equity market. I'm trying to ascertain here whether or not the S&P will actually close at a record high today. We are well off the best levels of the session. Right now, I'm seeing a gain of about 0.4%. You're going to need a few moments to get accurate settlement. It's possible that the S&P will close at a record. A lot of information tech strength today, and that helped to send the NASDAQ composite to a gain of something greater than 1.5%. But there was weakness in the Dow, off about 0.25%. So the theme today, broadly speaking, favored growth over value. And as I mentioned, technology strength, Apple, most heavily traded stock, up nearly 1.9% today. We also had Tesla shares better by more than 5%. Within this hour, President Biden will unveil his $2.25 trillion infrastructure plan. A large slice of this is going to focus on green energy, and some of the newest members of the S&P 500, names like the solar power company Enphase Energy and the lighting supplier Monolithic Power Systems. They traded up today, but these stocks are below their January peaks. Also had strength in Microsoft today. Shares picked up about 1.7%. The company's deal to build customized versions of that HoloLens goggle for the U.S. Army is moving forward. Microsoft today saying it's now worth as much as $21.9 billion over 10 years. And the Securities and Exchange Commission has opened a preliminary investigation into the meltdown of Archegos Capital Management. The fund's liquidation playing out today in Viacom CBS shares. Stock is down about 3.25% on the session. 10-year Treasury last quoted in New York at a yield of 1.72%. Some dollar weakness today with the Bloomberg Dollar Spot Index down 0.2%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic in our Interactive Brokers studio. Let's dig a little bit deeper. Doug, of course, breaking down those closing numbers, bouncing around a little bit. We did see a tech rally, although we did finish off our highs of the day when it came to the NASDAQ. For the S&P 500, broader market picture, 223 names in the S&P 500 higher today, 280 lower. Tim, 2 unchanged.
Yeah, it's pretty much how we're seeing it play out when you take a deeper look into the S&P 500 as far as sectors go. Information technology higher by 1.5%. Consumer discretionary higher by 0.8%. Utilities finishing third, higher by 0.6%. 6 sectors lower today. Energy lowest, down 0.9%. The big laggard today. Financials down 0.9%. Materials down 0.5 percentage point, as was real estate.
Hey, and just quickly, I want to mention, before we go to Abigail Doolittle, just mention Micron Technology crossing with their earnings. Second quarter adjusted EPS of 98 cents a share versus 45 cents. That's a year-over-year comparison. Let me just look at, looks like a second quarter adjusted EPS actually of 98 cents a share with the estimate of 94. That's what was looked for. So 4 cents better than what Wall Street was expecting. Revenue, $6.24 billion. That's pretty much in line. The estimate was for $6.21 million. And adjusted gross margin, 32.9%. That's better than the forecast of 32.4%. The outlook, third quarter revenue, company looking for $6.9 billion to $7.3 billion. That is definitely above estimates. $6.85 billion is the forecast that's been out there.
Micron Technology in after-hours trading, jumping around a little bit, but higher by about 3.3%.
Yeah, and we've been watching that semiconductor area big time because of some of the shortages that are out there. Hey, Bloomberg News markets reporter Abigail Doolittle standing by patiently for us. Come on in on the conversation, Abigail. Micron obviously going to be one of those names, along with the whole chip sector that we'll be watching certainly into the Thursday trade.
Absolutely. And as you and Tim were talking about Micron, what really stands out to me, 5-6 years ago, this was a less than $20 stock. Now it's a $90 stock in after hours. So they've really just been hitting home run after home run recently. And this is a piece of the action that we're seeing for the chips, the SOX, that chip heavy index on the quarter. It's really pretty incredible, up in a huge way, up 12%. So that's some of that tech strength. Now, there are some folks that think that that's one of the sectors that's frothy, has some air in it, that needs to come out, but no signs of that yet, especially with that performance out of Micron, perhaps a good tell on what's ahead. And of course, President Biden will be speaking shortly about his infrastructure plan and $50 billion dedicated to chip manufacturing, bringing it back to the U.S. That's a positive, and the chips responding well to that on the day and on the quarter.
Well, I'm so glad you brought up infrastructure. Of course, we are going to go to President Biden when he does start to speak a little later this hour, Abigail. But 5 a.m. this morning was when we started to see those details from what is in the proposal from the Biden administration. How do you characterize the way that markets digested it?
It's very interesting, Tim. So overall, markets for most of the day digested it in a very positive manner, mainly because you had the S&P 500 at an all-time high until just moments ago when the S&P 500 actually settled. It had been set for a record close.
Right, so we just missed it, right?
Yeah, ever so slightly. And it's a really interesting day because on the day, as you guys were talking about, banks and financials really underperformed, tech and discretionary up top. Now, that's a reversal of the reflation trade. So I think that you could say that some folks have priced in this infrastructure plan, this tremendous amount of stimulus, the reflation, the growth that the economy may receive from this money pouring into the economy and all sorts of public work, some comparing his programs, series of programs to FDR, which is, really pretty incredible, and tremendous amount of growth came out of that time period as well. So I think that that's the hope. It's some of it priced in sector-wise.
It's one of those things, though, right, Abigail? I mean, we're all watching, but I feel like markets to some extent kind of shrugged it off because it's a long way to making an announcement about it or expectations of it to actually implementation and getting a similar bill passed into law.
Yes, well, as they say, the devil is in the details. So I think people are going to want to know more details. But I would say if we look at the quarterly performance, a stellar performance on the quarter, and the main headline, stocks up big, bonds down, so that's very risk on. But the banks up 23% after gaining, I think, 25 or 28% in the fourth quarter. So that's really priced in. You have a lot of that reflationary idea. The transports, the Dow transports, talk about transportation, I think, was it $670 billion of the overall bill is to go to infrastructure, up 18% in the first quarter. The Russell 2000 also will benefit heavily from this sort of stimulus. So I think that investors have already had an eye on it. Now, to your point about, the devil being in the details, the fact that we did close right off the record high, maybe that's now. We have investors waiting. They want to hear the president's speech and really see some of those finer nuances worked out.
It's also a holiday week, and we got jobs on Friday, so I feel like people are starting to kind of all right, let's just take a step back. Abigail, thank you so much. Bloomberg News markets reporter Abigail Doolittle joining us on the phone. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the doors, Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Mr. Wilson, come on in and give us your stock of the day.
Cleveland-Cliffs, Tim. It's an iron ore producer that moved into steel through deal making. The company bought AK Steel last March and added the U.S. unit of Luxembourg's ArcelorMittal in December. Cleveland-Cliffs was founded in 1847. The ticker is CLF. The shares plunged 99% between 2008 and 2016 to set a record low. They approached that low last April, just after the AK Steel purchase was completed. Then they surged more than sixfold. And Cleveland-Cliffs rose further after making forecasts late yesterday for adjusted EBITDA. That's earnings before interest, taxes, depreciation, and amortization. Figures for this quarter, next quarter, and the full year beat analysts' average estimates in a Bloomberg survey. Cleveland-Cliffs said those forecasts were based on current business and steel prices. Whatever the case, the company's shares climbed to their highest price in about 7 years. They closed with a gain of 16.7%.
God, this is a stock that you often see among the most actives are winners and losers. It really moves around a lot, Dave.
Yeah, it sure does. And speaking of moving, my Song of the Day playlist for March will move you. It's up on Spotify. It's posted on Twitter. Check it out.
Get you on your feet dancing away. Right, Dave?
Get studying. I'm going to study. I'm going to study.
That's going to be, he's going to skip the podcast and listen
Exactly.
to Dave's playlist. All right, Dave, have a good evening. Let's get on over to Nancy Lyons, checking in on World and National News in D.C. Hey, Nance.
Hey, Carol. President Biden will be unveiling his American Jobs Plan in just a few minutes in Pittsburgh. It calls for a $2.25 trillion investment in infrastructure. But Senate Minority Leader Mitch McConnell told a Kentucky audience today he doesn't like it.
It's like a Trojan horse. It's called infrastructure, but inside the Trojan horse is going to be more borrowed money and massive tax increases.
McConnell says Biden called him about it yesterday. Well, today at the trial of former police officer Derek Chauvin, charged in the death of George Floyd, jurors heard from a Cups food clerk who initially called police about a counterfeit bill that Floyd had used to buy several items.
When I saw the bill, I noticed that it had a blue pigment to it, kind of how a $100 bill will have, and I found that odd, so I assumed that it was fake.
Christopher Martin says he still feels guilt because if he hadn't taken the bill and called police, he says this all could have been avoided. New York City police say 38-year-old Brandon Elliott is behind bars, facing charges of felony assault as a hate crime after a brutal beating of a 65-year-old Asian woman in broad daylight. Manhattan District Attorney Cy Vance says if convicted, Elliott will face up to 25 years in prison.
There is no place for these atrocious acts of anti-Asian violence in New York, particularly as the AAPI community is still grieving and still in pain following the heinous attack by the gunman in Georgia earlier just this month.
Vance says Elliott was on lifetime parole after serving time for the murder of his mother. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, so if you missed this, you definitely have to check it out. We've got a little snippet of an earlier conversation on Bloomberg TV and Bloomberg Radio when Bloomberg surveillance host Tom Keene and Lisa Abramowitz spoke to Baseball Hall of Famer and Miami Marlins CEO Derek Jeter about the team agreeing to a multi-year naming rights deal for its stadium. They're doing that with lender Loan Depot. So here's a little clip of the conversation where Lisa and Tom ask Derek Jeter about his career and his personal life.
What do you think is harder, Derek, being part of a team that won 5 World Series or running a baseball franchise as the owner?
That's a good question. I don't even know how to answer that. They're both pretty difficult. I think, you mentioned it. When you're on a team, you're on a field, you have one goal, and that's to win a championship each and every year, and nothing changes. It's the same thing here. I think the difference probably is, when you're playing, it's that particular game, that particular day. And on the business side, you're looking 3, 4, 5 years down the road. So I think there's a lot of similarities, but at the same time, you got to have a little bit more patience.
Derek, the problem here, and I understand the naming rights, you were struggling and you needed to get a refi through Loan Depot and Anthony Shea, but then you rented your house to Tom Brady. How was Tom Brady as a tenant? I mean, should you have gone to Loan Depot, or did it work out with Mr. Brady as tenant?
You know what? It worked out, actually, and I think I deserve a Super Bowl ring for him renting my house. So there's a lot of championships in that house.
That was such a fun conversation. Of course, that was Bloomberg Surveillance host Tom Keene and Lisa Abramowitz earlier catching up with Baseball Hall of Famer, Miami Marlins CEO Derek Jeter, of course, and you can see more of that interview at Bloomberg.com. It's something we're going to continue talking about a little bit, but we know that when it comes to naming rights of stadiums, it's big business. It's a lot of visibility, certainly for the company that's putting its name on a stadium. And it really, in terms of the payoff that they get ultimately, you see they're often coveted and not necessarily fought after, but there's a lot of teams sometimes really competing for that opportunity to do it. Anyway, we're going to continue talking about the business of sports. That's coming up in just a moment right here on Bloomberg Business Week. I'm Carol Masser. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We heard from Micron Technology after the bell. The company is giving guidance on revenue for their fiscal third quarter of, this is a range, between $6.9 billion to $7.3 billion. That is above, that range is above what the street was expecting. And if you look at Micron shares right now in late trading, up by 2.8%. For the equity market, it was a mixed day. We finished off the best levels of the session. At one point, the S&P appeared as though it was going to set a record high. We fell short of that mark at 39.72. The gain on the session was about 0.4%. Some Dow slippage. We were down about 0.3%. I think generally speaking here, the theme was growth over value, and that shows up in the tech space. Names like Apple and Tesla rallying today and leading the NASDAQ composite higher by more than 1.5%. Shares in Apple, the most heavily traded in the U.S. stock, was up about 1.9% today. And Microsoft shares gaining 1.7%. The company's deal to build customized versions of its HoloLens goggles for the U.S. Army moving forward today. Microsoft saying this deal is now worth as much as $21.9 billion over 10 years. 10-year Treasury last quoted at a yield of 1.73%. I'm Doug Prisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So we just mentioned this for some of our Bloomberg radio stations and audience. It's about baseball's Miami Marlins, run by Hall of Fame shortstop Derek Jeter. I can't even say it. Derek Jeter, getting multi-year naming rights for his stadium. So let's get more on this story. We did talk about it, teed it up a little bit for our Bloomberg radio stations. Quick Take Chief Correspondent Jason Kelly is here with us in studio. I'm just not used to having you here.
I know. Here I am.
You're usually like in my ear. My former
in
partner
your head,
in crime.
in your head.
Big deal.
Big deal. This is one of the last stays. There are only 9 left, actually, that haven't sold their naming rights. This was something that Derek Jeter, of course, the Hall of Famer, former Yankee shortstop, who is now the CEO and the owner, one of the owners of the Miami Marlins, had been working on for quite some time. He told me yesterday when I talked to him, quick flex, that, this was something that he really wanted to do. He is really overhauling both the business side and the baseball side of the Marlins.
This is a big part of the business side.
It's a huge part of the business
side. This is big money, right, usually?
It's usually big money. They didn't tell us exactly how much it was going to be, but a multi-year deal. And, importantly, you got to have money to run these clubs. The Marlins have not been super successful in terms of getting fans into the stands. They need more reasons to do that. And the team needs money to go out and get players and get better on the field. They did make the playoffs last year, so the baseball side is starting to work as well.
Anything fun from that conversation?
Fun to hear Jeter talk about how hard this job is. He said, I wouldn't necessarily say it's harder than I thought, but he did say it's definitely taking up more of my time than my wife would like, because he retired from baseball and now he's the CEO of a team.
Harder than playing baseball?
I don't know about that. I mean, the pressure is obviously different. Playing shortstop for the Yankees is probably one of the toughest, and being the captain of the Yankees is probably one of the highest pressure jobs. But now, he's in charge of the whole thing. He's the boss and has to make a lot of decisions. Hats off to him as well. The Marlins, as I'm sure you remember, made a big move earlier in the offseason, naming the first female general manager, Kim Ng.
It's a big deal.
So that's a big deal. And so he's making moves. Don't sleep on Jeter, man.
No, I would never. I wouldn't on you either.
Thank you.
You have your hands in so many different pots. Tell us about your new original series on Quick Take.
I'm very excited about this. So The Business of Sports, it premieres tonight on the Quick Take OTT stream, goes wide tomorrow.
Don't you already have Business of Sports on Bloomberg Radio?
I do.
Are you expanding the franchise?
Expanding the franchise a little bit, yeah. So this is a 4-episode run that we're doing. It starts tonight, and the first episode is a deep dive into my hometown, Atlanta, and how sports teams and athletes, I know.
Shocking.
Sports teams and athletes dug into the Get Out the Vote efforts and actually allowed people to vote. So stories you've never heard before, voices familiar to you, Tony Ressler, the owner of the Hawks, Renee Montgomery, now the owner of the Atlanta Dream. I mean, there's so many elements of this. I dare say that you're going to love.
Listen, Jason, I think about how many conversations you and I had over the past year when we started seeing professional teams stepping up and helping out during the crisis, but specifically when it came to voting in that November and providing places for people to do it safely among a health crisis. It was pretty remarkable.
Atlanta Hawks came up with the idea. And, one of the stories that we tell in this, and we have all the principals involved, is there's a phone call, literally, that Steve Koonin, the CEO of the Hawks, makes to the head of Fulton County and basically says, I've got an idea. I've got this empty stadium. I've got all these people. I've got the space you need to help people vote. 40,000 people voted at State Farm Arena alone. Now, keep in mind, the Georgia elections turned on about 13,000 votes.
Yeah. That is amazing, right? If you think about it, if that hadn't been there, how the outcome could have differed.
It could have differed for sure, and it also is, unfortunately, in many ways, very relevant right now, given what's going on in Georgia, with a lot of the back and forth that's happening around what voting access and voting rights look like.
Don't you think it's just interesting that in the last year or so, that I just think of the NFL and Colin Kaepernick and how he was criticized, right? Lost what he was doing, lost his job essentially, right? And how the league did not back him when he came to taking a stand when it came to racism. And yet, here we are now seeing professional teams openly say, okay, what can we do to fix some of these inequities?
And the NBA and notably the WNBA have been very forward-thinking about this. The WNBA also, as I'm sure you remember, they came out against their owner, Kelly Loeffler, who was running to keep her Senate seat. She was also the owner of the Dream. She said she didn't want players in the WNBA or her team. She didn't think it was a good idea for them to wear Black Lives Matter T-shirts. So what did they do? They wore shirts that said "Vote Warnock" and basically propelled Raphael Warnock, who goes on to win out of obscurity in this big primary, to be her primary challenger.
So what's changed in terms of it? Is it just that because the public sentiment has changed so dramatically and, that the professional teams can now come out and that they're getting support from their leagues?
I think it's the support. I think it's also that athletes have found their voice. We've talked a lot about LeBron James. We've talked a lot about other athletes who, and I think you cannot underestimate the power that female athletes have had in drawing this out for people, and it really is amazing to see what Renee Montgomery, Elizabeth Williams, Sue Bird, a lot of the female athletes have done here. They've changed the conversation.
Hey, so, all right, little plug, shameless plug. So what time can we watch this?
So 9 p.m. tonight on Quick Take.
Destination viewing?
Destination viewing.
Seems so old-fashioned.
Well, it'll go wide tomorrow on YouTube and Bloomberg.com. So, yeah, I'm very excited about it.
And the one of just the beginning, right?
Yes, 4-episode run. So next week we're going to look into the NCAA. Also going to look into American investors owning English sports clubs and the future of fitness.
Oh, really?
Sweat equity 2.0.
I just did not see that coming.
Didn't see it coming.
All right. Quick Take Chief Correspondent Jason Kelly. Check him out for The Business of Sports, his new Quick Take series starting this evening. All right. One of the big stories, no doubt about it, of course, is the infrastructure plan that we are expected to hear from President Biden. He is expected to make some comments out of Pittsburgh, and we will take you there as soon as he begins speaking. In the meantime, a little bit of what you need to know and what we're expecting. Bloomberg News White House reporter Mario Parker joining us on the phone from the nation's capital. Mario, what are you watching out for?
Well, looking at how the president kind of rolls out this plan for infrastructure in terms of just how we think of it in the traditional sense, with steel, bridges, etc. Of course, he's in Pittsburgh, but then also this component that the president has been talking more about as well, with the care economy and boosting that infrastructure that would support aging parents, children, those type of things.
Is it clean, or is there a lot of areas, like when you talk about improving the quality of life at home, clean water, high-speed broadband, like that makes sense, but when you talk about improving the quality of life, like I do wonder if there's lots of little measures that are going to be picked apart by Democrats and Republicans alike, and that will make passage more difficult.
Oh, no doubt. We've got a preview of it, right, with this COVID relief bill that passed earlier this year, in which it moved along partisan lines. The president, of course, campaigned on restoring bipartisanship to Washington, D.C. We haven't really seen that manifest itself, and that's to be seen whether that's a bygone era here. particularly with infrastructure. Republicans have no appetite for raising taxes. That's anathema for them. And in centrist Democrats, I'm thinking of Joe Manchin in West Virginia, Kirsten Sinema and Mark Kelly in Arizona. They're not necessarily, a sure thing in terms of votes either. So the president is going to have to rally his own caucus as he also continues to try to at least fulfill his campaign promises to extend an olive branch across the aisle.
Listen, like I said earlier, it's not apples to apples. China, though, has, does these long-term, decade, 15-year, plans, spending money, whether it's on infrastructure and other things, to plan for where the economy needs to be in the future and make those investments. Do we have lawmakers, policymakers in Congress does anybody think long-term?
Well, that's what the Biden administration is banking on, and it's interesting. You make a great point by invoking China. They've also invoked China as well. We know the sentiment toward the country in terms of global economic rival to the U.S. Republicans have talked about its emerging threat and its its strong economy, and so Biden has been characterizing this package in terms of making sure that we're not outpaced by China, which is probably a very wise move. It takes a chess piece from Republicans.
Mario, what do we know about public sentiment when it comes to something like infrastructure? I think you say infrastructure and people do think roads, bridges, the like. But it is a lot more here. How much of an education needs to be going on across America from the Biden team in order for Americans to kind of really understand, okay, where's this money going to go and how does it really benefit me versus getting another check in my pocket?
No, absolutely. That's absolutely what they're banking on, going around the country and really selling this package and what it means. I mean, from the polling that they've rolled out, that they've been citing, is that infrastructure in general is a bipartisan issue. It's something that both Republicans and Democrats outside of D.C. Can agree upon, that there's consensus that bridges that the nation's bridges are in disrepair, that roads need some tending to, that there's a need for good paying jobs that may not necessarily require a college education. And so public polling at least shows that there's strong sentiment behind the president in that regard.
And what's interesting, too, is, listen, we know we've had that massive COVID relief package. That's already gone through. Now we're talking about this $2.25 trillion infrastructure and tax proposal. There's another round of initiatives, right, that are going to come in a couple weeks?
Yes, absolutely. So they're the way I liken it to is, at first we were thinking that it was going to be Build Back Better, this massive infrastructure package. And now we're saying that they're breaking it up into smaller bites to make it, if you will, more palatable and more digestive for Washington, D.C. So we're saying that they've broken it up. He's expected to roll out another component of the plan in the next few weeks, mid-April maybe. That talks about the care economy and some of the soft infrastructure components.
So the president has said that he, or at least administration officials have said the president is open to input from members of Congress of both parties on what provisions should be in a final package and how to pay for them. Are there certain initiatives that the president will not back off on? And I'm just curious what you think will be the prime targets. I'm guessing taxes, you mentioned that earlier, but what are your thoughts there?
Well, with taxes even, on the campaign trail, he signaled that he wants a more, as he characterized it, a more equitable tax system where corporations or wealthy Americans pay, a greater share relative to others. But in recent days, the administration has also signaled that this is merely a proposal on how to pay for it. They're open to ideas. Now, where the president could find himself in a tough spot is with the green economy, right? That'll be a divisive issue for Republicans, and he'll face pressure from the leftward flank of his party, the progressives, to hold firm on those goals, electric vehicles, a green economy going forward. So he'll have less wiggle room there because he'll face some opposition or, backing from his own party encouraging him not to fold, if you will.
Right, and we are expected to hear from the president in under 2 minutes. So as soon as he begins speaking in Pittsburgh, we'll take our audience and Bloomberg Radio listeners there. What's interesting, too, though, this infrastructure package doesn't include any of the proposed tax increases on individuals that the president talked about on the campaign. Kind of very strategic, right? Corporate taxes, got it, but not individual taxes as part of this.
Right. It's been a thorn in the side of this White House. From day one, they've received questions about, more clarity on this $400,000 tax threshold that you've alluded to. That's something that, the opposition, Republicans for him, that's an easy talking point, right, that they could just put on the board. So it's smart politics to look at the corporations first and to kind of ease into how that would impact individuals.
Yeah, and what's interesting, and again, we're just about a minute away from the president expected to step up and make some comments. Just to wrap up here, I mean, if he actually gets a massive infrastructure program going, all of its stages, we're talking about something that could be transformational for the U.S.
Absolutely, and that's how they're phrasing it. They're looking at this as they're planting a flag, saying that last time this happened was the LBJ, Eisenhower, New Deal, those type of terms, and saying that that's also the reason why it needs to be addressed right now, because we haven't had massive infrastructure bills since those administrations almost a century ago.
Is there anything the president could say today that might surprise you?
Well, we'll be looking at how he'll be talking about just extending the olive branch. I mean, we're curious. He's been talking about this bipartisanship. I'm curious to find out how he's going to rally his own caucus and then also, again, be able to reach across the aisle. If he says something that's creative other than just kind of platitudes in that regard, will be very interesting.
All right. Well, we will be listening. That's for sure. Mario Parker, thank you so much. White House reporter at Bloomberg News on the phone from Washington, D.C. And again, we are awaiting the president from Pittsburgh any moment, expected to step up to the podium and talk about this $2.25 trillion spending plan and infrastructure plan that allocates $620 billion for transportation, including a doubling in federal funding for public transit, something that is certainly near and dear to any of us who live in the New York metropolitan area. It would provide $650 billion for initiatives tied to improving quality of life. We're talking about issues at home, clean water, something that a lot of us take for granted, but not everybody has. Same thing for high-speed broadband. Again, often taken for granted, but if you look around the country, that is not the case for every American. All right, we do want to take you to Pittsburgh. President Biden is stepping up to the podium, expected to talk more specifically about this infrastructure spending plan. Again, it's one of several layers that he is expected to lay out publicly, if you will, over the next couple of weeks. And again, we'll get some of the particulars. He has also talked about this corporate income tax. This is a way to pay for it specifically, and looking to increase that corporate income tax to 28% from 21%, setting a 21% minimum tax on global corporate earnings. So that would certainly be a big change from what we have seen, and certainly what was changed under the Biden administration. All right, you are listening to Bloomberg Business Week. Carol Masser in our Interactive Broker studio. I'm watching the podium there in Pittsburgh, and it looks like they might be doing a little bit of a mic check and cleaning up and setting up the podium for the president. So again, as soon as he begins speaking, we will take you there to hear directly what he has to say about his plans. In the meantime, reminder of how stocks closed on this Wednesday. Dow Jones Industrial Average down just about 0.25%, down 85 points. S&P 500 just missing a new record, but a gain still of about 0.4 percentage point, a gain of about 14 points at 39.72. And we did have a rally in the NASDAQ specifically, a little bit stronger earlier in the day, but still by the end of the close, we did see the NASDAQ up about 1.5% for a gain of 201 points, 13,246. So again, we are awaiting President Biden, expected to talk about this infrastructure plan. We did just hear from our own White House reporter, Mario Parker, talking about how many have likened his plans here to something that could be transformational in a way that we have not seen since the Great Society. In fact, Dean Baker, senior economist at the Center for Economic and Policy Research, it's a left-leaning think tank, actually said that in some of our reporting. He said, like a lot of people, He said, I underestimated Joe Biden. He was always in the background, as vice presidents are supposed to be, always in the center of the party politically, but he was clumsy. That is what we saw, and this is why I underestimated him. But I can't quarrel with what he's done since he took office. But again, looking at some of these massive spending plans that have already been put in place, of course, first and foremost, the COVID relief plan, which was put in place to put more money into businesses and specifically into individual pockets to help people get through until the economy opens and people are able to get back to work. So that was certainly the first supportive measure. And we've also seen the president from the get-go, once he was in the White House, a massive plan when it came to getting vaccines out, enough for all Americans. And we've seen that timeline actually move up as well. So this will be another leg in terms of the massive measures that he's been putting and trying to get into effect for the U.S. economy and for U.S. Americans specifically. As we talked earlier, though, you know, getting this through Congress, it's one thing putting the plan out, laying it out, getting it out to Americans, but then keep in mind a rough road in Congress likely, getting that Republican support, whether it's in the House of Representatives or in the U.S. Senate, both of which we do know Democrats control by narrow margins. It's going to be a bit difficult, if not impossible, and really getting all of those moderate and progressive Democrats will also be a challenge. All right, off to Pittsburgh. I think we're going to go. Looks like the podium is set up. They cleaned it. Just doing one last cleaning. This is the world we're living in, folks. But the president is standing by. Let's head to Pittsburgh and President Joe Biden getting ready to talk about that $2.25 trillion spending plan, that infrastructure plan. Let's see what he has to say.
Gov, Mike asked me, and say to Bobby, my good friend, he asked me back there, he said, do you ever get nervous? And he said, because I got up this morning and made breakfast for my kids, so I got to introduce the president. And well, I say to you, Mike, you did a heck of a job, but I'd get nervous if I had to get up in the middle of the night, climb up a telephone pole, replace in the middle of a storm a connection that knocked out everybody's electricity, put a transformer in. That's what would make me nervous. So what you did was really good. I couldn't do what you do, pal. I couldn't do what you do. And I want to, and it's true, Mike, you're a union guy. Me too. I got in trouble, but I don't make any apologies for it. I'm a union guy. I support unions. Unions built the middle class. It's about time they start to get a piece of the action. To all my colleagues, from the county executive to the mayor, to everyone that's here, I want to say thank you. Thank you, Congressman, for the passport in your district, and I appreciate being here. I'm honored to be with you. 2 years ago, I began my campaign here in Pittsburgh, saying I was running to rebuild the backbone of America. And today, I return as your president to lay out the vision of how I believe we do that, rebuild the backbone of America. It's a vision not seen through the eyes of Wall Street or Washington, but through the eyes of hardworking people, like the people I grew up with. People like Mike and his union family, union workers from this Carpenters Training Center. People like the folks I grew up with in Scranton and Claymont, Delaware. People who get up every day, work hard, raise their family, pay their taxes, serve their country, and volunteer for their communities, and just looking for a little bit of breathing room, just a little bit of light. Ordinary Americans doing extraordinary things. People who break their necks every day for their families and the country they love. A country that, in fact, which on the day I was elected was in extreme distress, with the virus on a deadly rampage that has now killed over 500, I carry it in my pocket every day. I have the list of exactly how many have died. 547,296 Americans dead from the virus. More than all the people killed in World War I, World War II, the Vietnam War, 9/11, 547,296 Americans, and an economy that left millions out of work and created so much anxiety. That's why I moved so quickly to pass the American Rescue Plan with the help of my friends here in the Congress. I really mean that. It didn't pass by a whole lot, but with the leadership of Connor and Bobby and the Mayor, you got it done. Because it was an emergency. We needed to act to save jobs, to save businesses, to save lives. And that's what we did. We're beginning to see the results. We're on our way to having given 200 million vaccination shots in the first 100 days of my presidency. When I said I'd get 100 million done, people thought it was a significant exaggeration. We're going to get 200 million done, twice the original goal, because of all the help of all of you. Leading economists are now predicting our economy will grow 6% this year. That's a rate we haven't seen in years and years. We can cut child poverty in half this year. With the American Rescue Plan, we're meeting immediate emergencies. Now it's time to rebuild. Even before the crisis we're now facing, those at the very top in America were doing very well, which is fine. They were doing great. But everyone else was falling behind. The pandemic only made the division so much worse and more obvious. Millions of Americans lost their jobs last year, while the wealthiest 1% of Americans saw their net worth increase by $4 trillion. Just goes to show you how distorted and unfair our economy has become. It wasn't always this way. Well, it's time to change that. I note parenthetically that I got criticized for giving tax breaks to middle class and poor folks this last time. I didn't hear that cry, you and cry, when we were doing the same thing. When Trump's tax bill passed, 83% of the money went to the top 1%. You know, this is not to target those who've made it, not to seek retribution. This is about opening opportunities for everybody else. And here's the truth. We all will do better when we all do well. It's time to build our economy from the bottom up and from the middle out, not the top down. That hadn't worked very well. For the economy overall, it hadn't worked. Because Wall Street didn't build this country. You, great middle class, built this country. And unions built the middle class. And it's time, and this time, when we rebuild the middle class, we're going to bring everybody along. Regardless of your background, your color, your religion, no matter, everybody gets to come along. So today, I'm proposing a plan for the nation that rewards work, not just rewards wealth. It builds a fair economy that gives everybody a chance to succeed. And it's going to create the strongest, most resilient, innovative economy in the world. It's not a plan that tinkers around the edges. It's a once-in-a-generation investment in America, unlike anything we've seen or done since we built the interstate highway system and the space race decades ago. In fact, it's the largest American jobs investment since World War II. It will create millions of jobs, good-paying jobs. It will grow the economy, make us more competitive around the world, promote our national security interests, and put us in a position to win the global competition with China in the upcoming years. It's big, yes. It's bold, yes. And we can get it done. It has two parts: the American Jobs Plan and the American Families Plan. Both are essential to our economic future. In a few weeks, I'll talk about the Americans' family plan, but today, I want to talk about the Americans' jobs plan. I'll begin with the heart of the plan. It modernizes transportation infrastructure, our roads, our bridges, our airports. I just left your airport. The director of the airport said we're about to renovate the airport. Is that right, Mr. County Executive? We're going to innovate. We're going to employ thousands of people. And she looked at me and said, I can't thank you enough for this plan. It grows the economy in key ways. It puts people to work to repair and upgrade that we badly need. It makes it easier and more efficient to move goods, to get to work, and to make us more competitive around the world. Some of you local officials know when someone wants to come in the area and a company wants to invest, what do they ask? Where's the first rail bed? How can I get to the railroad? What access to the interstate do I have? What's the water like? Tell me about it. It goes on and on. It's about infrastructure. The American Jobs Plan will modernize 20,000 miles of highways, roads, and main streets that are in difficult shape right now. It'll fix the nation's 10 most economically significant bridges in America that require replacement. Remember that bridge that went down? We got 10 most economically significant bridges with more commerce going across it that need to be replaced. We'll also repair 10,000 bridges, desperately needed upgrades to unclog traffic, keep people safe, and connect our cities, towns, and tribes across the country. The American Jobs Plan will build new rail corridors and transit lines, easing congestion, cutting pollution, slashing commute times, and opening up investment in communities that become connected to the cities and cities to the outskirts, where a lot of jobs are these days. It'll reduce the bottlenecks of commerce at our ports and our airports. The American Jobs Plan will lead to a transformational progress in our effort to tackle climate change with American jobs and American ingenuity, protect our community from billions of dollars of damage from historic superstorms, floods, wildfires, droughts, year after year, by making our infrastructure more secure and resilient and seizing incredible opportunities for American workers and American farmers in a clean energy future. Skilled workers, like one we just heard from, building a nationwide network of 500,000 charging stations, creating good-paying jobs by leading the world in the manufacturing and export of clean electric cars and trucks. We're going to provide tax incentives and point-of-sale rebates to help all American families afford clean vehicles of the future. The federal government owns an enormous fleet of vehicles, which are going to be transitioned to clean electric vehicles and hydrogen vehicles right here in the United States of America by American workers with American products. When we make all of these investments, we're going to make sure, as the executive order I signed early on, that we buy American. That means investing in American-based companies and American workers. Not a contract will go out that I control that will not go to a company that is an American company with American products all the way down the line and American workers. And we'll buy the goods we need from all of America, communities that have historically been left out of these investments. Black, Latino, Asian American, Native Americans, rural, small businesses, entrepreneurs across the country. Look, today, up to 10 million homes in America and more than 400,000 schools and child care centers have pipes where they get their water from, pipes that are lead-based pipes, including pipes for drinking water. According to scientists, there is simply no safe exposure to lead for a child. Lead can slow development, put plumbers and pipe fitters to work, replacing 100% of the nation's lead pipes and service lines. So every American, every child can turn on a faucet of our fountain and drink clean water. With each $5,000 investment, replacing a line that can mean up to $22,000 in health care costs saved. Chance to protect our children, help them learn and thrive. We can't delay. We can't delay another minute. It's long past due. You know, in America, where the early interest was in internet, this thing called the internet that we invested, we invented the early internet. It was invented here. Millions of Americans, though, lack access to reliable high-speed internet, including more than 35% of rural America. It's a disparity even more pronounced during this pandemic. American jobs will make sure every single American has access to high-quality, affordable, high-speed internet for businesses, for schools. And when I say affordable, I mean it. Americans pay too much for internet service. We're going to drive down the price for families who have service now and make it easier for families who don't have affordable service to be able to get it now. As we saw in Texas and elsewhere, our electrical power and power grids are vulnerable to storms, catastrophic failures, and security lapses, with tragic results. My American Jobs Plan will put hundreds of thousands of people to work, hundreds of thousands of people to work, line workers, electricians, and laborers, laying thousands of miles of transmission line, building a modern, resilient, and fully clean grid, and capping hundreds of thousands of literally orphan oil and gas wells that need to be cleaned up because they're abandoned, paying the same exact rate that a union man or woman would get having dug that well in the first place. We'll build, upgrade, and weatherize affordable, energy-efficient housing, commercial buildings for millions of Americans. Even before the pandemic, millions of working families faced enormous financial and personal strain trying to raise their kids and care for their parents at the same time, the so-called sandwich generation, or family members with disability. You got a child at home, you can't stay home from work to take care of that child unless you lose, the child's at risk, or you lose your job, or you have an elderly parent you're taking care of. And seniors and people with disabilities living independently feel that strain as well, but we know if they can remain independently living, they live longer. American Jobs Plan is going to help in big ways. It's going to extend access to quality, affordable home community-based care. Think of expanded vital services like programs for seniors. Or think of home care workers going into homes of seniors and people with disabilities, cooking meals, helping them get around their homes, and helping them be able to live more independently. For too long, caregivers who are disproportionately women and women of color and immigrants.
All right, once again,
plan changes that with better wages, benefits, and opportunities for millions of people who will be able to get to work in an economy that works for them. You know, decades ago, the United States government used to spend 2% of its GDP, its gross domestic product, on research and development. Today, we spend less than 1%. I think it's 0.7%. Here's why that matters. We're one of only a few major economies in the world whose public investment in research and development as a share of GDP has declined constantly over the last 25 years. And we've fallen back. The rest of the world is closing in and closing in fast. We can't allow this to continue. American Jobs Plan is the biggest increase in our federal non-defense research and development spending on record. It's going to boost America's innovative edge in markets where global leadership is up for grabs. Markets like battery technology, biotechnology, computer chips, clean energy, the competition with China in particular. Critics say we shouldn't spend this money. They ask, what do we get out of it? Well, they said the same thing when we first flew into space for the first time. They said the same thing. Well, pushing the frontiers led to big benefits back home. When NASA created Apollo's digital flight control system, unheard of at the time, it led to technologies that help us today to drive our cars and fly our planes. When NASA invented ways to keep food safe for the astronauts, it led to programs that have been used for decades to keep food safe in supermarkets. At least 2,000 products and services have been developed and commercialized as a result of American space exploration. GPS has helped us find each other. Computer chips allow us to see and talk to one another, even separated by mountains and oceans, singing happy birthday and watching the first steps of that new baby grandchild, comforting each other when comfort is needed. Think about what it means to you and your loved ones. We just have to imagine again. I had a long discussion with Xi Jinping, leader of China, and he called to congratulate me. We spent 2 hours on the phone. And he said, and I was astonished, my national security team and the China experts who were on the line, he said, you've always said, Mr. President, that you can define America in one word,